IT bellwether Accenture's commentary remains weak, indicates uncertainty over US federal contracts. However, IT tech stocks on Dalal Street open with cuts, recover largely as the exposure of Indian IT companies to such contracts remains limited. The IT index now at the high point.
Bajaj Finance has surged over 2.5% after the company elevates Rajiv Jain to the post of vice chairman for a 3-year period. Remember, in an interaction with CNBC-TV18 earlier in the week, Bajaj Finserv chairman and managing director Sanjeev Bajaj had said that Rajiv Jain remains very committed to the business. Brokerages also remain bullish on the stock.
So CNBC-TV18 Newsbreak, which has been confirmed, defense stocks, Power Dynamics, BEML and Hindustan Aeronautics surge after the Defence Acquisition Council approves proposals worth 54,000 crore rupees.
United Spirits has surged over 1.5% after brokerage firm Citi upgraded the stock to a buy with a target price of 1650 rupees, suggesting that the company's earnings growth is likely to remain resilient due to several factors.
VA Tech Wabag also surges more than 7% after the company signs a non-binding term sheet with a Norfund-led consortium for a fundraise of $100 million. TBO Tech under pressure after a large trade where nearly 7% equity was exchanged via a block deal. Straight off the bat, it is a 100-point move on the Nifty, conquering 23,300. You're watching us here live on Chartbusters. We come to you from the CNBC TV18 Motilal Oswal studio. I'm Mangalam, with me Hormaz Fatakia. Hormaz, typical of a market where bulls are in control, right? We've gained almost 1,000 points in the last 6 sessions, 1,200 points to be precise. This morning there was a dip. Bulls lapped that up from the lows. We've seen a rally and 115 points on the Nifty immediately.
Make that 1,300 now since we've conquered 23,300, yes. And there's as you mentioned, right, it's been the trend over the last couple of sessions. You get that dip early in the morning, that dip gets very swiftly bought into, and as you can see, the index now has surged to the highs of the day. And similar is going for some of the stocks in the broader markets as well. With some names like Tejas Networks, they've surged almost 16% now in today's session. The top gainer on the Nifty 500, Jupiter Wagons 2 is up 12%. And JM Financial has moved to the high point of the day as well with that 10% move. But what are the charts indicating right now? Do we see some consolidation after such an up move, or do we see some more upside? Nagraj Shetty of HDFC Securities is joining in to answer that. Nagraj, good morning. Thank you for joining in now with almost 1,300 points right on the Nifty over the last few trading sessions from that March 4th low. What are the charts indicating here? Do we move to 23,500 next, and couple that up with your stock recommendations as well?
Hi, good morning. Nifty has been in a tremendous upmove, no doubt about that. In the previous, it has significantly reversed the downtrend of the last few months. Chartically, market is looking very strong. Previously, the every resistance were held with the selling pressures. Now the strong resistance are being taken out easily one after the another. This is the characteristic of a strong upside momentum, the reversal in the chart pattern. I'm expecting this 23,300 was a hurdle as per the on the weekly chart with the downsloping trend, and I'm expecting the way market is moving up. We may see some consolidation at the higher levels, but certainly not any decline from the highs from near the resistance. So the next upside resistance to be watched from here onwards is around 23,800 levels, which is the previous swing highs of around of February, which would comes in. So that's for Nifty and the stocks. I have two stocks from the long side. One is from defense, as you mentioned, BML. Chartically, BML was in a sharp downtrend a few months back, and recently moved up very well from the lower levels. Some consolidation pattern is taken place, and it has bounced back from the lows. Currently trading around 2810 levels. One can look to buy at this point of time for the short-term upside target of around 2950, 2960, and one can place a stop loss for 2740 levels. Second one is GSPL. GSPL was moving in a rounding bottom type pattern at the higher levels. And currently showing breaking out of the consolidation. The overall chart pattern is looking positive, and it is moving above the initial hurdle of around 10 and 20-day EMA on the daily chart. Currently trading around 289, 290. One can look to buy at this point of time. The immediate target would be around 305, 306, and one can place a stop loss at 280.
All right, take that point. So 2 stocks that you have. Thank you so much for joining in. In fact, as we speak, a bunch of stocks actually spiking. Manappuram Finance, which was supposed to be the stock of the day on account of the news that came by, opened slightly muted, but now has picked pace, currently moved to the high point of trade. Remember, the offer price is close to 236. Stock still about 6 rupees away from that. Amara Raja Batteries is the other one which has surged, and then we have Adani Green, which too has moved higher. Don't lose sight of names like Bandhan Bank as well. That stock too has moved higher. So all the financials actually doing well, along with a bunch of other stocks too. Get you ideas for profit from our colleagues at Money Control Pro. Today we have Sachin, who's joining in with a stock that he's been tracking closely. Sachin.
The stock in focus is Carysil, which is the sole manufacturer of quad sinks in Asia. Well, over the past 3 years, the company has in fact diversified its revenue as well as geographic footprint through 2 acquisitions, one in the UK and one in the US, and now operates across 4 different business verticals. Well, in terms of financial performance of the company, the Q1 and Q2 performance of the business was quite healthy, both in terms of top line as well as margins. However, Q3 delivered a mild negative surprise, especially on the margins front, wherein the margins slipped almost 450 basis points on account of multiple factors, including higher material costs as well as cross-currency fluctuations. Nonetheless, the management remains very confident of being able to reattain the margins of almost 70 to 18% in the near term. Well, going into FY26, the company has recently signed an agreement with a US-based retail chain for the supply of 150,000 quad sinks, which is estimated to have a revenue potential in the range of 90 to 100 crores. Therefore, the company is expected to deliver strong revenue growth in FY26. Besides, the margins also stand to benefit from scale efficiencies. On the balance sheet front, the company has in fact raised almost 125 crores last year by the way of QIP, and therefore the balance sheet of the company remains very strong from that standpoint. Well, the outlook of the business continues to remain very healthy, and the stock has in fact been very volatile, primarily due to the market conditions, and now trades around 23 times FY26 estimated earnings, which we believe is very reasonable for accumulation from a long-term standpoint.
All right, Sachin, thanks a lot for that. Meanwhile, as we slip into a short break, some important news coming at the bottom of your screen from Ola Electric, which says that the temporary backlog is being filled. They've given reasons. So, despite all the regulatory run-ins that have taken place with regards to Ola, the company believes that it's steadfast in its commitment of growth when it comes to sales. We've seen some recovery in the stock. We don't know how much of that is on account of, the drubbing that we had seen on Ola Electric already, the mood of the market, and how much of that is actually on the basis of what the company has said itself. 40% of the factory backlog has been already cleared, is what the company has been claiming. Meanwhile, look at Raymond as well. That stock is up another 8.5% today, this morning itself. Realty stocks have been doing well, and this Raymond, of course, is the one which has the realty business and the engineering business. We had the management earlier this week join in and spoke about 20-25% growth in that vertical for them. And this week itself, that stock is gained almost 25%. So that's a big move from the lows that we've seen on Raymond as well. So keep an eye out on a bunch of individual stocks that are doing well as the broader markets continue to outperform. Take a short break. On the other side, Kapil Makhija, who's the CEO of Unicommerce Solutions, joins in to discuss the company's acquisition of Shipway Technology and a lot more. Stay with us.
Welcome back. And just before we get to the management of Unicommerce, flashes also with regards to BHEL, the company has won an order worth 7,500 crore rupees from the Gujarat State Electricity Corporation. That stock has surged to the highs of the day, 3.5% higher. And L&T too has won an order, as you could have just seen just a few minutes ago, flashing on your screen there. You can see bagged orders in the range of 2,500 to 5,000 crore rupees from the Brigade Group. That stock too trading with gains of 1.5% at the day's high. But shifting focus now to Unicommerce e-Solutions, the company is set to acquire the remaining 57.25% stake in Shipway. With this acquisition, Shipway will become a wholly owned subsidiary of Unicommerce e-Solutions. Kapil Makhija, who is the CEO, is now joining in to discuss this acquisition in detail and to also discuss the road ahead for the company. Kapil, good morning. Thank you for joining in. What was the rationale behind taking this decision to acquire the remaining 57% stake? And also, why did you not pay cash for this transaction? If you could also tell us the resultant dilution that will take place as a result of this share swap.
So first of all, glad to be here. Thanks for inviting me. I think the reason our vision is to become a one-stop shop for e-commerce enablement, and our acquisition of Shipway is in line with that vision. we want to offer an end-to-end solution for e-commerce brands and sellers. If you look at the entire e-commerce value chain, there are three key layers. And with the Shipway acquisition, we now have solutions across all the three key layers: customer engagement layer, transaction processing layer, and order fulfillment layer. So now we are able to offer an end-to-end solution. If you recall, we done the first tranche in December, where we had paid a cash already to acquire a 42.7% stake. And now we have acquired the remaining stake. We had mentioned that at the time of first tranche itself, that we are very committed to acquire the remaining stake and make this a wholly owned subsidiary. We already had board control in the first tranche itself, and we have already started to operate like a one entity, because ultimately we want to offer a single one-stop solution to all the e-commerce brands and sellers.
Yes, we understand that, but what we wanted to know is, why did you not pay cash and dilute equity? What would the net dilution be once this is acquired?
So Unicommerce is issuing equity share of the tune of 60.3 lakhs. The swap ratio is 1:8.9. That depends on the valuation of both the companies. And with this, Shipway is now becoming a wholly owned subsidiary. And ultimately, it helps open a large TAM for us. Courier aggregation alone is a 4,000 crore TAM. And with 35 million shipments that Shipway is already doing, it's a clear number 2 in the market already. And the two largest players, I think the market is ripe. As it's fast growing, the market is ripe to continue to drive growth in the overall system. And it becomes a big growth engine for Unicommerce as well with the Shipway acquisition.
What about the profitability path for Shipway, Kapil? Because as of December of 24, its PAT margins were a negative 3%. And as of FY24, the PAT margins were a negative 5%. Do you have a timeline as to when Shipway turns profitable, and what steps are you taking to ensure that it happens?
Sure. So Shipway is already on a path to profitability because, as you rightly mentioned, it has the PAT margin has improved from negative 5% to negative 3%, and we see a lot of synergies. One is a sales synergy. Today the overlap between Uniware and Shipway customer base is less than 5%. So there is a significant cross-sell opportunity. So it will help drive sales acceleration. Second, we see synergies both on the direct and the indirect cost side. We have got relationships with the courier partner, not just at Uniware, but also at a group level. So that helps us drive synergies on the direct cost. And plus, with combined forces, we see synergies on the indirect costs as well. So we hopefully will be able to turn the business profitable soon, and with the synergies that I just outlined for you.
All right. And, even if it does turn profitable, it perhaps may remain still a drag on your profitability, right? Because your own margins are close to around, 14 to 15%. Even if it does break even, it'll be 0% at best 1 to 2%. That still continue to be a bit of a drag. So if you could give us a sense on what kind of further synergies do you foresee out here? Yes, you did speak about your TAM expanding by about 4,000 crores. But of that, the incremental revenue that you would generate could be how much?
Yeah, so see how we are viewing Unicommerce as an overall entity is our flagship platform, Uniware, is extremely sticky. We've got a large enterprise customer base. So it continues to drive and has significant operating leverage. So it continues to drive profit growth for us. While the new products, the Shipway Courier Aggregation, Convertway, that both of these have come as part of the Shipway acquisition, will continue to be a growth driver for us because it helps. They are operating in fairly large TAMs with relatively new entrants. While they are a clear number 2 in the courier aggregation space, there is significant headroom for growth. So these become growth engine for us. So as a combined entity, we'll continue to deliver consistent growth in revenues and profits. And we've always historically grown faster than the market, and we'll continue to do that. And this acquisition helps us offer a unified suite, which has been the demand from all our customers. And that's why this makes sense to be able to offer a one-stop shop e-commerce enablement suite to all our customers, as well as the new e-commerce brands and sellers that come onto the e-commerce brand wagon.
Right. The reason why I asked this is because earlier you said you will be issuing about 60.33 lakh shares. At the current number of shares that you have, and if you look at the number of more shares that you would issue, it would be a dilution of anywhere between 5.8 to 6% on a pre or post money basis, depending on the way you calculate. So for a 6% equity dilution, could there be a concomitant EPS move on the way up for it to be neutral and value accretive for shareholders?
Definitely, I think that's our intent as well, because
By
like
when?
it is our sorry, before I answer how it's going to be value accretive, before I answer that, let me talk about how it's going to be value accretive. So the idea is that, like I said, it's in a large 4,000 crore market, right? And it's today at a run rate of about roughly 70 crore ARR. So that there's a significant headroom for growth. So I think there will be a significant revenue growth potential for the business. And to top it all, we have, because more and more brands and sellers in the e-commerce ecosystem in India prefer a one-stop solution. So we see a lot of sales synergies that are coming in, particularly given that the overlap is less than 5%. So there is a significant growth that we can drive in the business through the new products that we have gotten on board, plus the existing relationships that we have with nearly 7,000 customers across 10,000 plus brands. I think there will be a significant growth in revenues. And as a result of that, will continue to see a consistent growth in profits as well.
Okay. One was, by when do you expect it to be value accretive from a shareholder standpoint, EPS standpoint? That was one. And the second part is, of all the solutions that you are offering, how much of that are agnostic to whether it's e-commerce or quick commerce? Because the belief is that quick commerce will drive overall e-commerce growth as well. So is there any synergy there?
Yeah, so our solutions are aligned with quick commerce. Quick commerce is another form of online selling. So
yes,
we are already integrated with all the leading quick commerce platforms, including the likes of Blinkit and others. And because we are a one-stop shop for e-commerce enablement, right? So a brand, whether it's selling on e-commerce marketplaces or quick commerce marketplaces, they need a single window solution to be able to manage their e-commerce offering. So irrespective of whether a particular horizontal or a vertical marketplace grows or a quick commerce channel grows, we stand to gain because we are a one-stop shop for e-commerce enablement. So as e-commerce continues to grow and become a way of life, we will continue to reap benefits of that. Plus, we continue to add new products as we have done through this acquisition, plus the other new products that we've been working on. So we will continue to serve this vision of being a one-stop shop and serve this entire ecosystem of e-commerce brands and sellers in helping to simplify their e-commerce selling.
All right, Kapil, thank you so much for sparing time and joining us today this morning. Wish you good luck for the rest of the year as well. The management there of Unicommerce eSolutions on their latest acquisition. The stock currently trading with gains of around 2.75%. By the way, we spoke of some gainers during the start of the trading session. Some of the losers as well. TBO Tech, after the block deal that took place earlier in the morning, is down 4.5%. Remains the top loser on the Nifty 500. And some of these air-conditioned cooling linked names. Amber Enterprises is down 4.5%. Voltas is down 2.5%. So some bit of profit booking after the run-up that these stocks have seen over the last month or so. Amber is still up 15% over the last 1 month. So is Voltas, up around 13%. But with that, we call time on this edition of Chartbusters. We leave you with the Nifty at the highest point of the day at 23,350, another 150 points higher. We are set to end this week on a blockbuster note. From Manglam, me and the team that put this show together, thank you so much for watching. Trading Hour on the other side.